It's time now for Your Money with Evans Financial, and joining us today in the studio is Dave Evans. Thanks for joining us.
Thank you for allowing me to be here. It's an opportunity. Absolutely.
Well, it's election day, right?
Yep.
It's also an election year. So do you notice any differences to the market and maybe being a little bit more volatile?
Oh, yeah. Things seem to get shaky as we sneak up on elections, and it's sometimes just because of the promises that the people campaigning are making. Whether they can fulfill them or not is one thing, but so people react to those promises, and the market seems to, it's going up and going down, and but over a long haul, generally it settles down, and historical trends are such that while the election cycle is shaky before the election, things have a tendency to calm down, and generally after the election is settled, which sometimes takes a while, but after it's settled, generally the markets react on a positive basis and typically trend up.
Good.
But I think that to avoid that, you should think about the long-term perspective, and the long-term perspective is whatever your plan is, stick to the plan and try and avoid, I'm going to say, knee-jerk reactions. Knee-jerk reactions are, oh my gosh, the market went down, so I'm going to sell. I got to get out.
Right.
That's like buying high and selling low. I buy cars that way, but it's not good for your financial plan to let the whim of the market control your buying decision. Because when you're doing that, making a knee-jerk reaction, you're going to be losing money, and I don't think that's your purpose in the whole thing. That's the whole point of having a long-term perspective when you're doing your planning. You come up with a plan, and then you stick with the plan through the highs and lows, and especially during the shaky times that we have during election cycle.
Absolutely, and I feel like that's a great perspective for anyone to have, no matter if it's an election year.
That's correct.
Or
yes.
When you're talking with a financial advisor, I'm sure that that's something you would tell someone just starting out as
well.
We
tell them just don't panic just because you see a downturn in the market last night. Sometimes a downturn in the market is a reaction to something that happened overseas last night, and doesn't necessarily mean it's going to be have a significant impact for the long term in your financial well-being. So stick to a plan that you and your advisor have developed, and then just go forward, and just don't have any knee-jerk reactions and say, quick, I got to get out and then sell.
I love that. That's great advice. So if anybody is wanting more tips, or maybe to get connected with you with Evans Financial, where can they find you?
We can find us at evansfinancial.com or info@evansfinancial.